Well, good morning. I'm Devinder Rana. The topic for the discussion today is insurance for all in India. Insurance for all in India. The economic growth and expanding middle class innovation and increased awareness are driving insurance growth in India. So it is predicted that India's insurance market will be the fastest growing among the G20 nations with an average expected growth rate of 7.1% from 2024 to 2028. Now, according to the Insurance Regulatory and Development Authority of India, India's insurance penetration stands at just about 4%, with life insurance penetration even declining from 3.2% in 21-22 to 3% in 22-23, and non-life insurance penetration remaining stagnant at 1%. Now, to boost India's insurance sector, the IRDAI has committed itself to achieving insurance for all by 2047, where every citizen and enterprise of India has appropriate coverage. Now, according to the insurance regulator, the three pillars of the Indian insurance ecosystems are policyholder, insurance provider, that is insurer, and insurance distributors, that is intermediaries. Now, to achieve the IRDAI's vision of insurance for all, insurers and insurance intermediaries will need to grow and expand, driving distribution, insurance awareness, and penetration. So, this is a review introduced by the IRDAI in the past years, categorizing each by the intent of the regulator and assessing their impact on insurance intermediaries. Now, what is the current situation of digitization? See, in the past decade, IRDAI has consistently urged industry participants to move towards digitization. Recent changes introduced by the IRDAI seek to bolster existing norms on digitization, with the regulator taking a firmer approach on technology integration. So, by introducing these changes, the IRDAI aims to enhance operational efficiency and customer satisfaction, ensuring that the insurance industry keeps pace with technological advancements and leverages digitization to its fullest potential. Now, the regulator has updated the existing regulations on protection of policyholders and introduced the IRDAI, that is Protection of Policyholders' Interest Operations and Allied Matters of Insurance Regulations 2024. In short, this is called PPHI regulations. Protection of Policyholders' Interest Operations. So, pursuant to these regulations, it is now mandatory for insurers to issue digital policies, and policyholders are required to open an e-insurance account to store the access these policies digitally. So, additionally, the recent Master Circular on General Insurance 2024, that is Master Circular GI, mandates insurers adopt end-to-end technology solutions to manage the entire customer journey digitally. So, from policy purchase to policy servicing, grievance redressal and claim processing. So, the rules applicable previously stipulated that specific products or policies that met the thresholds set out, they were required to be issued electronically by insurers. So the rules also provided that insurers were required to have in place systems, including IT systems, and procedures for receiving, registering, and addressing grievances. So, with the IRDAI mandating digitization in policy issuance, policy servicing, and grievance redressal, the regulations cannot be deemed merely as old wine in a new bottle. So, efficient digital servicing of insurance is bound to bolster the policyholder's experience, which will positively impact insurance intermediaries as well as insurers. However, it is the implementation of these regulations that will ultimately determine whether the industry is effectively able to move towards complete digitization. Next one is innovation. So, with an aim to bolster innovation in the industry, the IRDAI through the Master Circular GI has expressly permitted customization of insurance products tailored to the individual's needs. This essentially mandates insurers to strive to launch innovative products that are beneficial to customers. So, for an industry that for a long time relied on tariff wordings for various lines of general insurance, business such as motor, fire, engineering, and workers' compensation, this reform marks a landmark shift in the way general insurance products have historically been designed in the country. So interestingly, the IRDAI had previously permitted insurers and distributors to launch innovative products within a regulatory sandbox region. This regime was effective in encouraging innovations, but had its limitations such as restricted scale and duration of testing and the need for continuous oversight. With the introduction of Master Circular GI, insurers will now have more freedom with respect to designing general insurance products, although they will need to comply with the general principles for specific lines of insurance provided. In today's evolving risk landscape, customization of insurance products coupled with the enablement of the use and file procedure is bound to be a boon for the insurance industry. So, tailoring insurance products to specific customer need makes offering more relevant and appealing, addressing diverse demographics and niche markets. So, this can also enhance satisfaction and trust, encouraging more people to purchase and retain policies designed for their unique needs. So the availability of diverse and innovative products will benefit intermediaries as well if they can work hand in hand with the insurers so that there is greater insurance penetration. As far as ease of business is concerned, several regulatory changes to simplify procedures and enhance the ease of doing business for the insurance sector have been introduced. Some of these breakthrough changes have come by way of the IRDAI Expenses of Management of Insurers Transacting General or Health Insurance Business Regulations 2023, that is EOM General, and the IRDAI Expenses of Management of Insurers Transacting Life Insurance Business Regulations 2023, that is EOM Life, read with the IRDA Payment of Commission Regulations 2023, that is Commission Regulations. So these norms amended the existing commission structures by doing away with limits on commission, remuneration and reward as previously stipulated for different policies, lines of business, and instead interlinking the payment limits with the umbrella thresholds of expenses of management stipulated for each line of business. So simplifying commission norms. Simplifying commission norms has been positively received by the industry as a whole. These regulatory changes allow insurers to formulate benchmarks under their respective board approved policies on payment of commission and push distributors to become more efficient, customer focused, and strategic in their operations. So insurers and distributors can leverage these new norms to enhance their profitability and ultimately drive expansion and growth. In addition, the IRDAI has taken the initiatives to consolidate, repeal, and amend numerous regulations, guidelines, and circulars into simpler documents, bringing clarity and efficiency to the regulatory framework, including the IRDAI expenses of management, including commissions of insurers, Regulations 2024, merging the existing UIM General, UIM Life, and Commission regulations into a single comprehensive regulation. The IRDAI registration, capital structure, transfer of shares, and amalgamation of insurers, Regulation 2024 consolidate and replace several previous regulations related to registration, issuance of capital, forms of capital, schemes of amalgamation for life and general insurance. And the PPHI regulations now incorporate inter alia regulations and guidelines on the receipt of premiums, opening, closing of places of business, e-insurance policies, outsourcing of insurers, norms on protection of policyholders, and advertising regulations. And as far as claim processing is concerned, so for greater efficiency in cashless settlements under the Master Circular GI, insurers are now required to respond within 1 hour to cashless settlement requests and establish dedicated help desks at hospitals to assist with these requests, reducing administrative hassles for customers. In terms of grievance redressal and claim processing, the circular now mandate shorter timelines and enhanced efficiency to prevent unnecessary delays. Insurers must have robust grievance redressal system with no claims being repudiated without the approval of their respective product management committee or claims review committee, ensuring accountability and fairness. So the Master Circular GI introduces updated timelines for claims processing, emphasizing enhanced transparency and efficiency. Insurers are now required to promptly notify policyholders of settlement timelines. So surveyors must be appointed within 24 hours of claim reporting, reduced from the previous 72 hours, and the reports must be submitted within 15 days of allocation. Now, insurers must now decide on claims within 7 days of receiving the survey report, a change from the previous allowance of 30 days from the surveyor's final report. Any delays shall incur penalties. It is clarified that warranty breaches or delay caused by policyholders which do not impact the loss cannot be used as grounds to void claims. Further, insurers will soon be required to appoint surveyors through a digital portal managed by the General Insurance Council. So this move will potentially prevent biased assessments and enhance the efficiency, transparency, and policyholder friendliness of the claim process. The role of the Ombudsman has also been strengthened. Insurers now face a penalty of rupees 5,000 $60 per day for non-compliance with the Ombudsman awards, ensuring that decisions are adhered to, reinforcing the Ombudsman's role as an effective forum for grievance redressal. So efficient claims processing and effective grievance redressal have the potential to significantly boost customers' confidence, making consumers feel secure in investing their savings and insurance. So meticulous implementation of these measures is poised to foster a positive impact on insurance competition or insurance penetration. Now, as far as customer satisfaction is concerned, to enhance customer service and satisfaction, the IRDAI has introduced significant regulatory changes through the Master Circular on Health Insurance 2024. Insurers are now required to offer a variety of product add-ons and riders catering to customers of all ages, medical conditions, and healthcare providers. Coverage must extend to technological advancements, including treatments like stem cell therapy and robotic surgery. Similarly, the IRDAI has released guidelines on providing Ayurveda, yoga, and naturopathy, Unani, Siddha, Swarikpa, and homeopathy, that is Ayush coverage. In health insurance policies, mandating insurers to have a board approved policy for Ayush coverage. So this is in line with the Ministry of Ayush, which encourages use of traditional and alternative medicines and places Ayush treatment on a par with other treatments for health insurance, providing policyholders with more treatment options. So by mandating that insurers offer a broad spectrum of product, add-ons and riders, the revised norms are aimed at ensuring that policyholders have access to comprehensive healthcare options. So these efforts underscores the IRDAI's commitment to promoting inclusive and responsive health insurance policies that meet the evolving healthcare needs of the population, aligning with global standards and regulatory reforms. Insurers offering inclusive coverage and a wider variety of products is bound to positively impact penetration, enhance customer satisfaction, and strengthen market resilience. As far as the approach of the IRDAI is concerned, IRDAI's 2023-24 reforms are poised to positively impact the insurance industry, creating a more transparent, efficient, and consumer-centric market. Key drivers of this transformation include the integration of technology and innovative product offerings, enabling insurers to meet the evolving needs of consumers. Both traditional and digital distribution channels are being optimized to increase reach, especially in rural areas. Regulatory clarity and simplification are being emphasized to ensure that insurers operate within a robust framework, protecting policyholders' interests while promoting the ease of doing business. So, as the Indian insurance market grows, focusing on innovations and digital transformation becomes essential to close the insurance protection gap. So, with ongoing reforms and a proactive approach, the Indian insurance sector shows potential for growth and development. This positions it on a path towards achieving the goal of insurance for all by 2047, aiming to meet the evolving needs of all segments of society. Thank you very much.